Hello, 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 professionals. I see we have a small group today. I'm glad we're back for community space with you guys. As you guys know, we're jumping into the basics and the fundamentals of trading. So we're going to be doing some fun stuff in this session throughout the 6 weeks. We're going to have a demo trading challenge. There's going to be lots of time for some Q&A, question and answer, and also for you guys to get the opportunity to explore the market a little bit and learn a little bit more how you can directly invest yourselves. So if I can get, since it's a small group today, if I could get Jaden and Charlene to come off of mute and introduce yourselves really briefly, if that's possible. And I'm okay with whoever going first. Good morning, guys. And either of you feel free to go ahead and introduce yourself if you want to come off mute. If you're not comfortable coming off mute, we can jump right into the content today. Jaden, my mic doesn't work. Sorry about that. Okay, no, that's okay. It's nice to meet you. Are you guys both entrepreneurs? Can you let me know, even if it's by text in the chat, that works as well. Are you guys both entrepreneurs, or are you professionals, or in between? What stage are we at right now? Just so I can have the best understanding possible of kind of how we can hone in today's information to fit the small group that we have. Are you guys business owners, professionals? Okay, in the meantime, I'll share my presentation with you guys. And feel free to confirm with me if you're able to see or not. Okay, so welcome to week 1 of the BBPA's community space. And as I mentioned before, these sessions are going to be about the basics of trading and welcoming you guys to the market, and some of those key investor pieces of knowledge that you may or may not have that you're definitely going to need to embark on your direct investor journey. So to give you kind of a little bit of an overview of what today's session will be about, we're going to introduce the stock market fundamentals and types of stocks and how trading works. Okay, so today's session is going to be broken down like this. We're going to talk a little bit about what the stock market is by going through an overview of the stock market itself. We're going to talk a little bit about how it functions and its role in the economy, and then we're going to talk about different types of stocks. So the differences between common and preferred stocks and sectors like tech, healthcare, and finance, right? We're going to talk a little bit about how trading works, so understanding the buying and selling of stocks and on stock exchanges and the role of brokers. And then we'll talk a little bit as well about the stakeholders themselves, so the role of investors and the role of traders. Hopefully that sounds good. If there's any comments, questions, or concerns, feel free to type a message in the message box, or if it's of your preference, you can come off mute as well. But otherwise, I will be continuing. Okay, so we're going to start with today's open activity. Unfortunately, as we mentioned, a few of you guys are actually not able to come off of mute. So we'll try these activities to the best of our ability, and then we'll also do what we can to try to employ some typing as well. Jaden, I can see here that you did let me know you're a student, you're studying business, and you were wanting to learn more about trading. That's amazing too. I studied business as well, so that's awesome. And trading is definitely a crucial part of business, understanding investing, and so on and so forth. So I think you're up the right alley. Okay. We're going to head back to our presentation. And I'm just going to embark in my first question for you guys, which is I want you guys to share one thing that you've always wondered about the stock market. So, Jaden, you've already kind of let me know that you're a student of business, and you've always kind of had certain interests in the stock market. So, can you tell me a little bit more about what that looks like, or can you tell me a little bit about what some of the questions you might have in regards to the stock market are? And you guys can feel free. I'll give you a minute because I know if you're not coming off mute particularly, you might need a second to type things in the chat. So I'll definitely give you that time. but let me know what is something that you're curious about when it comes to the stock market. And Charlene, if you want to participate as well, you can feel free. Something that you're curious about. And I'll give you guys a minute with that one. And in the meantime, we can definitely move on. I wanted to know how familiar you guys are with the stock market. So on a scale from 1 to 5, even if you can't think of anything in particular that you want to know right now or any questions in particular, where would you place yourself in terms of how familiar you are with stocks, investing, or the stock market, or anything like that? Let's see. Okay. What are the best stocks to invest in? Okay. Okay. Um, so to answer your question in terms of like a general question that you already have about stocks, the greatest advice I probably got in reference to what stocks to particularly invest in was that you should really invest in stocks that relate to companies that you frequently deal with or that are involved in your life. So if you use Amazon, you're going to want to invest in Amazon. If you're a motorcycle person, maybe you'll want to invest in some motorcycle manufacturers. If you're into technology and that kind of stuff, you might want to invest in the tech sector. If you're into environmentally friendly initiatives, you might want to do some socially conscious companies and do some investing on that end, right? So you want to make sure you're investing in what you actually have interest in, just because the market is cyclical. So there's seasons for everything. So if you invest, whether you invest in chocolate or whether you invest in computer parts, there's going to be a peak season for both of those industries. Now, the catch is to be paying enough attention, right, to the actual company and the actual security that you have your investment in to know when to maneuver, right? To know when to make that move. Okay, Charlene. So I'm an adult who's not really learned about the stock market except the basics. Yeah. So for example, like right now, I'm also a wealth manager, of course, as you guys know, and you're familiar with TSK Wealth. In that sector, there are some portfolios that I might build out for people, but they're often custom. I was also wondering, what are some trading patterns you follow? Yeah, definitely. So I actually recently just began to put together my trading frameworks as products. So they'll be a part of my business, part of TSK Wealth and that kind of stuff, and a part of me, Chanel. But being here on the community space, I actually have the extra pleasure of getting to tell you guys about some of those things. So let's say, for example, now that you asked that question, I could definitely come back next week and bring you guys some of like the frameworks of my trading, which has to do with maybe times of the week that you buy and sell, the best time for certain things, the best time for trade swaps, the best time for purchases, best time for sales, sale recommendations, purchase recommendations, and then like just asset allocation. So how you could better balance your portfolio, and how you can diversify, right? Because there's different types of stocks. We know that we'd want to determine, are we looking for fixed income? So are we looking for dividends and that kind of stuff? Or are we looking for kind of long-term investment and long-term growth equity, right? So we would have to determine some of those needs first, and then that would then lead us to the next step of, okay, what stocks are we investing in? So let's say, for example, if you're really into like fixed income and you want to be making additional income or like profit is what's important to you, you're definitely going to want to focus on industries like tobacco industries, what else? Gas, gives out lots of dividends, and a few more that aren't just right at the tip of my tongue. But those industries typically have high dividend yields. And what you're going to be paying attention to in those stocks are not the value, right? They're 9, 10, 13, $17. So it's not the equitable value per se, but it's the fixed income, right? It's the dividend piece. So those are probably two things to consider to yourself as an investor, is what are some things that I'm interested in? So what are some of the companies behind, like maybe some of the foods I'm interested in and some of the things that I use? And then also, what is your purpose for investing? So are you looking for long-term growth or are you looking for fixed income? right? So those are some of the things that help you determine, I guess, some of those criteria so that you can know, okay, specifically, I'm going to grab this stock, that stock, or what type of investor you're going to be. So we can move on to our next activity. I wanted you guys to name a public company and share why you might invest in it. So given what we've just discussed, I want you to name a public company, any company that comes to your mind, and share with us why you might invest in that company. Yeah, definitely. So I was wondering if you are more of a daily trader or if you invest in long-term stocks. I'm more of an old-fashioned trader. I'm a long-term girly, but day trading isn't necessary. Day trading is not investing. So we've got to be careful with that. Day trading isn't necessarily investing. It falls under investing activities, but the process itself of day trading isn't really investing. And you have to be a little bit careful there. Day trading is definitely for professionals who are versed in the field. I wouldn't advise anyone who is at this journey in direct investing to start thinking about day trading. Um, it's a fast-paced sport and it's very aggressive. I would definitely say you want to be looking at things from two perspectives. Either you want long-term growth or you want fixed income, so income from dividends. Day trading is something I probably would urge anyone who's at the beginning stages of investing to stay away from, just considering the volatility of the activity. So hopefully that answers your question. Me personally, um, I'm long-term investor or I'm dividend bound. That's me. It's profitable to me right now or it's going to be profitable to me later. But I dibble dabble in a little bit of both just based on my ability to manage, right? So knowing that you're just getting into something, you would have to decide or distinguish for yourself how much you can manage. Are you going to focus first on trying to get some fixed income stock? Or are you going to focus more on equity and kind of see how it grows and watch and observe? Are you going to do both at the same time and pay attention to it there? Or whatever the case may be. Yeah. Day trading is a little bit more of an activity, just like anything else that you could do to make money, through actually engaging in that activity itself. It's not really something that passively, generates any income. So hopefully that answers your question as well. And then it's up to you guys if you're going to give that last activity a try there, which was, it was Take Two the name of the company, Jaden, that you might invest in, the name of the public company that you might be interested in investing in? Yes. Okay, Take Two. So personally, I'm not familiar. If you want, in the meantime, you can drop a little bit of a blurb, but let us know why you might be interested in investing in that company and what they do. And that would definitely help give us some background. Okay, so I see that Charlene said Telus seems to be good based on volatility in its competitors. Roger seems to have moved ahead, though. I haven't recently checked on them. Okay, so you like the telecommunications. So you feel like maybe you rely on your phone a lot, and you feel like that's a steady industry clearly as well, based on what you've said. So it seems like the phone companies, or the telecommunications is something you would invest in. And you're actually right on there. Telecommunications is an industry that's actually typically perceived as relatively stable. Majority of the time, even like cyclically, no, they're not a cyclical industry. They're pretty year round and ongoing, because telecommunications are something that people constantly rely on all throughout the year. So it is a good company to invest in, and I would stick that on the equity side. I wouldn't necessarily stick any of those on the fixed income side because as far as I'm concerned, Rogers or Telus don't have high dividend yields, so you won't be making high fixed income in that case. But definitely very, very, very solid equitable stocks, right? So I would invest in a company that has long that Right, right. Okay, sorry. So I was just reading Jaden's comment in regards to Grand Theft Auto and it what looks like a media company, right? So I'm glad you brought this up as well. This may or may not be a good company to invest in. So we're definitely going to want to watch a company like this for more than a year. Like a company within that first year or that we're watching the trends of that company just within a year and it's only been consistent with that trend for a year or less than a year, it's definitely not indicative of a pattern to us, right? So a pattern is three or more times. So we would want to see if we're looking at the graph, whether we're looking from like a 5 or 10 year perspective, that whatever patterns that company's securities display, that we at least see it like 2 or 3 times, right? 3 times to be frank, but that we at least see it a few times, so that it's indicative of, to us that this security or this company has reached some sort of normalcy in terms of at least operating in a cycle, right? Yeah, no worries. And that says Channel, by the way, but Chanel, yes. What about gold? Gold is good. Gold is always steady. I know I've been hearing some like rumors recently, oh, gold's no good, so on and so forth. Gold is a primary commodity. Those are kind of things that you could look up when you look at commodities differently than stocks and securities. Gold is a primary commodity, meaning it's very unlikely to devalue at a point where you'll lose. Gold will always hold its value and it will always be a good investment. Now, again, equitable investment, right? Um, no, that's okay. Thank you so much. Yeah, again, equitable investment. So that's going to be more long-term, equity focused. It's not going to be profit driven. It's definitely not going to be short-term, and you're not going to have that fixed income, right? So that's just something to keep in mind. Okay, so next we've got, what is the stock market? Okay, so the stock market is a platform where shares of public listed companies are bought and sold. It enables companies to raise capital and allows individuals to invest in business. The stock market's role in the economy consists of many things. Number one, capital raising. Businesses sell shares to fund operations or to expand. Wealth creation is number two. Investors can earn profits by buying shares in successful companies. Economic growth. So the stock market reflects the economy's health with stock prices rising during growth periods. So for example, companies like Apple or Shopify use the stock market to raise funds for new purchases or new products and expansion. So they do public offerings of stock, right, of pieces of the company. Either they break it down or they do new offerings, right? So those are the securities and the stocks that are available to us. And essentially they get the money that we pay for them in return based on whatever the market has decided the value of that portion of the company is. Then they typically use those funds for new products, new projects, or expansion, right? And we've already asked if you could think of a company whose stocks you'd want to own. Okay, are there any questions about that section just yet before I move on? I don't want to move too quickly, but we're already halfway there. And I do want to make sure that I'm getting to all your questions. Always seems as though I'm too late to jump on the bandwagon. Yeah, no, definitely. And that does happen to a lot of people, right? So I'm glad that you brought that up because it leads us back to that initial piece of advice that I gave. You don't want to be, and that's why I said it was such valuable advice. You never want to be investing in anything that you don't care enough about to keep up with. It's the only way to be able to gather useful information to help influence or to help negate tough market decisions, right? So for example, if I'm really into Apple and I use all my Apple products and all that kind of stuff, and I find fascination in Apple, I'm invested in Apple, right? So of course I'm going to go ahead, I'm going to invest in Apple. And I know that I'm likely to watch what's happening with Apple. So am I keeping up with when new phones are going to come out or announcements of new phones? Or if a new phone is coming out, I definitely know that I probably want to flip some of my Apple shares, right? I'm going to want to divvy it up. If I've got 54 Apple shares, right? When the iPhone 16 is coming out, the day that that launches, I'm selling half. I'm selling half, wait it out, get some normalcy, and then I'm going to repurchase the same amount and I'm going to take my profits, right? Because evidently I would have sold at a peak. Mhm. Yeah. So, and that's what helps you from being late on the bandwagon is when you invest in companies or invest in securities that you have interest in, then it's easier for you to keep up to date with those corporations and those companies. So you wait for normalcy. When you go back in is about timing and is about knowledge. Obviously, the 16 only comes out one day, so the rush of the newness of the phone is only going to last so long. You're definitely going to have to sell, and then you're going to sell at peak, and then you're going to hold for maybe at least a month. If my memory serves me correctly, Apple usually drops their new phones at around Christmas time. So you're going to want to wait until the new year dies down until about February or March. And if you could wait it out even longer, April or May. And that's when you'll start to see again some normalcy in the price. And then you could go back and purchase at the true market value. So that's about intrinsic value, right? So the difference between a stock when you're seeing it inflated or when you're seeing it at a time where it's just performing well versus a stock that is carrying its actual intrinsic value. So the price is reflecting truly what the stock is worth, right? So we're going to talk a little bit about how trading works. Common stock represents ownership in a company, as you guys know. So, but with common stock, voters or with common stockholders have voting rights when it comes to key decisions. So common shareholders receive dividends if the company decides to distribute, but they are the last to get paid if a company gets bankrupt. So holders get fixed dividends of preferred stock. So if you have preferred stock, you get fixed dividends and you have priority over common shareholders if the company is liquidated. So if the company is liquidated or if it goes bankrupt, you have preference over common stockholders. Okay, perfect. Okay, so preferred stockholder holders get fixed dividends and have priority over common shareholders. And then as it speaks to sectors, there are stocks categorized into sectors. So technology, that could be Google, Microsoft, there's healthcare, Johnson Johnson, finance, TD Bank, RBC, so on and so forth, right? So there's several different categories that stocks can be categorized into. For example, investing in Tesla, in the common stock sector, tech sector, with investing in a utility company, right, for steady dividends. So utility companies are also another industry that give out high dividends, right? So again, you're definitely going to see that lower price point, lower equity value, but then you're also going to see the value in the dividends, right? And the fixed income. Okay. Exactly. Yeah. Timing is definitely everything when it comes to investing, right? Okay, okay, just making sure I'm not missing any notes. Okay, so we're getting into the role of investors and traders. So buying and selling stocks. So we want to understand that buying a stock means purchasing a small piece of a company. So we talked about that, right? It means attaining ownership of a small piece of a company. So prices do fluctuate based on supply and demand. So that's market supply and demand, which is consumer supply and demand. When more people want to buy stock, its price increases. When more people want to sell, the price decreases or subsequently can drop, right? So What are stock exchanges? Stocks are bought and sold on exchanges like the NYSE, so the New York Stock Exchange, or the NASDAQ. And then we have the TSX, the Toronto Stock Exchange. So they provide a marketplace for trading. The role of brokers act as intermediaries by executing buy or sell orders on behalf of investors. So you might have a broker that manages your stocks and whatnot if you don't want to do that. If you just want to be the person who maybe makes all the knowledgeable decisions or kind of like manages or is the CEO of your direct investing, but you're far more interested in having a broker of some sort that takes accountability for those trades that take place. A lot of people do that as well. Okay. So you can actually buy things like a share of Amazon or whatever the case may be online with apps like Wealthsimple, TD. I'm pretty sure our RBC now has a direct investor opportunity. So that's just about opening up a cash account with those banks. Once that's done, then you come back to community space, you learn what you can, or you connect with me, and then we talk a little bit about building you up a custom portfolio and getting you the right asset allocation and what that looks like, right? So a question for you guys is, have you ever considered buying stocks? If you don't have any as yet, and if you have, what platform have you thought to use to do so? So the question just was, have you thought about buying stocks? And if you have, what platform would you use to do so? So have you done it or have you thought about doing it and what platform would you use? Yes, I've considered it and I would probably use Wealthsimple. Okay, awesome. So we have one person for Wealthsimple. Thank you, Jaden. Thanks for sharing. Awesome, awesome. Okay. All right, so this brings us to our key takeaways. Before I open up the floor for any questions, I'll go through the key takeaways with you guys, and then we'll pretty much go from there in terms of questions or whatever else you guys feel like you want. There is some email handouts to give to you guys, even if not to be used in the session, but to be kept as, like, I guess, retained information and knowledge and just as tangible tools that you can take away from the workshop. So those packages will be emailed to you guys and they include notes and definitions from each week actually, and some space for you to take notes as well. So we'll go over some of those key takeaways. The stock market allows investors to buy and sell shares in publicly listed companies, fueling economic growth. That's key takeaway number one. Key takeaway number two, stocks can be categorized into common, preferred, and with each offering different benefits. Key takeaway number three, trading stocks involves brokers who facilitate transactions and prices fluctuate based on supply and demand. And number four, investors focus on long-term wealth building while day traders seek short-term gains. Okay, so that's also another really important thing I told you guys not to forget. And again, just review week two. You'll see all the topics and everything like that posted by the BBPA and come prepared. So I know we started off late today. I really had to organize today's lesson so that it was more about me getting a feel from you guys about where you are with everything and meeting you where that is. I've not done it, but thinking, thank you. Yeah, no worries, right? If you have TD, use the web broker, that kind of stuff. I'd love to know how you guys felt about today's session. Was it too heavy? Was it too much info? Too little info? You can feel free to type in the chat and kind of let me know, is this type of information and this type of trading information and understanding of stocks, companies, and valuation, is it relevant to where you guys feel like you are right now in your journeys for trading and investing? Paper trading, can you expand on that a little bit more, Jaden? If you get the opportunity to type something out, expand on that for me a little bit more. And it for everyone who isn't typing yet, before we kind of close up or wrap up with questions and last comments, questions and concerns, let me know what your guys' opinions were on the content of the workshop today and whether or not you feel as if it meets where you're at in terms of investor information, right? Was it good? Was it beginner enough for you guys? Was it too beginner? Was it too much information? Was it too advanced? Let me know right now in the chat if you want to, if you felt like the information and the facilitation in the session today was kind of meeting you where you are at right now as an investor. There are no best stocks to buy right now in general. Last year of 2023, the market performed 16 to 20%, in spite of what assumptions were going around and what people were saying in terms of how poorly the market was doing. So it's not about what stocks are best to buy now. I think you might have just come in and you missed kind of like the little blurb I gave to everybody in terms of what stocks to specifically buy. I sell my frameworks when it comes to that, portfolios, building portfolios and custom portfolios, general portfolios, that kind of stuff. Whether they're for fixed income, so that's for dividends, meaning you're making profit along the way, or if it's for equitable growth, meaning the value of the stock itself. Now, with that being said, to answer your question, I urge everyone to purchase stocks that they're interested in. There's not a best time, right? There's some companies that are doing the best they'll ever kind of be doing. Maybe now is not the time to purchase, but there's some companies who are on their way up and they're not going to ever be worth as little as they were before. So even though it's on its way up, it's a good time to catch it because you'll have something valuable with it, right? You'll have something valuable with you and within your ownership. However, if let's say if there's a stock that's not doing too well that you have interest in, great. Like it could very possibly be the right time to buy that stock because it's likely that it'll be undervalued and you'll get it at a lower price, right? Right. It's like trading with fake money and real stock. Yeah. Yeah. So not necessarily so like simulated trading or whatnot. So for my second degree, we did Questrade. Was it or no, it wasn't Questrade, it was Stock Trade. Stock Track. That's what it was. Stock Track. So we did Stock Track, which was essentially just like that. We got $2 million. And then we had to kind of organize our own asset allocation and decide how we were going to invest it. And then it also became like a competition throughout the entire program. Thousands of students were competing to essentially build the best portfolio, right? So it's something that we definitely have lots of practice and we're versed in, but it's not a one size fits all piece of advice. You know, some of the big A's are good, like those ones are good for the future. Apple, Amazon, Walmart, but Alphabet, like Google, right? So a lot of those guys are good to purchase and put down for the future because no matter what, you're going to have that equitable growth in it. However, in terms of fixed income and that kind of stuff, that's not where you would go. And then also too, you want to make sure that you're picking stocks that you have interest in. Yeah, that's good. That's good. Semiconductor stocks doing well. Yeah, that's good. I really hope to in-depth understanding of stocks and trading. Can you elaborate on some of the bullet points that you've gone through regarding why not? Well, yeah. So I won't just like randomly go through the bullet points, but if that's your specific question at the end there in terms of the fixed rate and the equitable growth, I can definitely elaborate a bit on that. And yeah, just once again, like semiconductor stocks are doing well right now. It's just my job to get you guys out of kind of like that mindset of looking at stocks like, oh, this stock is doing well right now. It's not really a good way to look at the market. And I try to avoid talking like that. And then I don't really teach people to think of the market like that. We never want to be thinking, oh, this stock's doing well right now. Like it's not like that. The market performs as a whole. And if you have a balanced portfolio, you'll benefit from when things are not going so well or when things are going well. And then we also don't want to be paying attention to when stocks are doing well because that's when we get into that habit of, oh, we jumped on the bandwagon too late, right? You don't buy a stock when it's doing well. You actually buy a stock when it's not doing so well because you know it's undervalued, right? So it's a bit of that, six of one, half a dozen of the other. So it's just knowing that, let's say a credible company like Walmart goes through a scandal or something, buy their stock, right? Walmart's definitely going to come back. There's only like Walmart's the only Walmart in Canada, you know, and that kind of stuff. So you're going to want to use that opportunity to buy the stock, right? So that's not, we wouldn't turn around and say, oh, you know, Walmart's not doing so well right now, I'm not going to buy it. No, right? We're going to say Walmart's not doing so well right now. And we could see, right? We don't only use trend analysis. We don't only use history. We also use calculations, right? And technical analysis to know based on kind of what a stock's done in the past, what it's going to do in the future, right? Some people believe in technical, some people don't. That's, you know, more in depth in terms of what type of investor you decide to be, right? Yeah, so back to your question, Charlene. Why not fixed income and equitable? Okay, yeah. So if you could elaborate on your question regarding the whys and why nots, we will talk more about the specificities of fixed income stocks, like purchasing stocks for fixed income purpose or purchasing stocks for equitable intentions. Give me 1 second. Yeah, exactly. So we'll get more in depth on that. I wouldn't say I would tell, there's nothing I'm going to say here. Everything I am going to tell you guys is a suggestion at that to say the most. I'll never say what to do particularly because becoming an investor is almost like choosing the right therapist. You want to get to know yourself a little bit so you understand things like risk tolerance, what your intentions are, what you care about income wise. You care about equitable growth. Do you care about profit? Do you have a high risk tolerance? Are you risk averse? Those kind of things, and really getting to know yourself in reference to the market, and then being able to apply that knowledge to the way that you invest. And that's kind of the process that we'll go through in the next few weeks so that you even have that confidence to say, yeah, I'm going to take a shot at this, or I'm going to take a shot at that. And just going literal step by step, one at a time, and 100% you'll get there, right? We all started somewhere. But yeah, I just to elaborate again, fixed income is going to have to do with things like dividends. So utility companies, tobacco companies, they have good dividends, right? So these are companies that are constantly strong. The industries have just been strong for so long that the money that they promise their investors that they're going to pay out, they can pay it out. Right. So these are some of the companies you want to invest in if you want to make. So let's say, for example, we've got a dividend yield of 5% on a $10 stock, right? I want to say 5%, and it's kind of 5% $10 stock. I think that's like 20 cents. But $2. 2.2, yeah, 20 cents or something like that, whatever. So we're going to go with 25 cents. And let's say you have that $10 stock and you're getting 25 cents dividend. That means that if you own 8 of those stocks, you're getting $2 dividend now. So 8 of those stocks at a value of $80, and you're making $2 on top on that $80 every single month. So depending on how many you have, that's going to heighten like the dividends that you get paid out. Okay, so that's like dividend ROR, dividend return on investment with fixed income. Now, when it comes to equity and that kind of stuff, you're going to look at companies like Amazon, let's say, for example, or yeah, actually, yeah, Amazon's a good example. They were worth like 2 years ago, they were worth like half of what they're worth right now. Right? So these are companies that their actual, like the intrinsic value, it's not based on their performance. So a utility company, it's not really worth much. Like it's a generic utility company. A nicotine company, it's not really worth much. It's nicotine. Like there's not much unique about it, but it's an industry that performs well. When it comes to things like Amazon, Apple, these are niche industries, tech, new forms of delivery and shipping and all these kinds of fun things, right? what happens with explorative industries is that they're a little bit less predictable. So they won't promise dividends, but they allow the value in how well the company is performing to show in the through the value, the intrinsic value of the stock. So meanwhile, you're not going to get that $2 on $80 from Amazon. You are going to be in possession of a stock that's worth like $300. Right? An asset worth $300. And depending on when you buy it, you could have bought it below that price, right? So I hope that kind of filled you guys up for today. We're not going to go on super duper long. I'll put a halt on the questions. I can see that you guys are really, really intrigued. Okay, great. Okay, good. That's good to hear, Charlene. Jaden, thank you. Everald is probably out as well. Right? So let's just come back next week. I'll let you guys know what next week's topic is, and I'll actually make sure that Stephanie is able to send you guys the handouts or any other materials. And next week, we're going to be looking at the buy and sell game. So we're going to look at orders, strategies, and timing. Right. And I know that for you ladies, that was one of the major questions today, right? We had both question about strategy and we had questions about timing. So week 2, that's what it's going to be filled up with. It's all about strategies and timing. And I'll get the materials emailed to you guys. So hopefully you get a chance to brief those materials before class as well, and just get familiar with some of the terms and the definitions that I'm going to use. So that also too, you have like really good quality probing questions if there is anything that you ever feel the need to ask. Yeah, no problem. No problem. It was excellent being in here. Thank you guys a lot for your participation as well. Stay tuned.